Hey guys, welcome back to this YouTube channel. Finally, it's March and it's time to review the data for Feb, which has been an absolutely crazy month for the Calgary real estate market. While things have been very different around the country in Canada, Calgary, on the other hand, has had a very different picture. There is so much to cover in this report, so anything that comes on the market is quickly absorbed, and therefore we are still stuck. Semi-detached, month over month, 14,000 finally. Northwest, major shift from the gains seen last month. And so make sure you stay till the end so that you don't miss out on all these details when you are making your decision in 2024. Before we get started, it's me, Iyer again, your Calgary Realtor. My link's in the description. Let's book a call. And there's only so much I can cover on this report. Depending on which community, what house type, what budget you're looking for, the picture could be very different. So make sure you reach out. Let's have a chat. No obligations. I would love to give you more data, more information, so you can make an informed decision. So to kick it off, we are going to look at the summary by the Calgary Real Estate Board. Right off the bat, we can see that new listings have continued to rise in Feb, reaching a total of 2,711 units. New listings supported further growth in sales. So as new listings are coming on the market, they're quickly being absorbed, and therefore, you can see in the next statement, sales to new listings ratios remains exceptionally high at 79%. And so therefore, inventory still remains extremely low. This is a trend we have seen all through last year. It improved a little bit in winter and we were able to get some great deals. But now the spring market's already here in full force. And so anything that comes on the market is quickly absorbed, and therefore we are still stuck in that low inventory cycle. Low supply and higher sales cause months of supply to fall to just over a month. Purchasers acting quickly when new supply comes onto the market, preventing inventory growth. The biggest supply challenge is for homes priced under $500,000, which saw inventories fall by 31% compared to last Feb. Things above $500,000 are pretty much a balanced market. Right here we can see more balanced conditions in the upper end. But when it comes to under $500,000, that's where all the competition is. Most affordable East District is experiencing the highest year-over-year price growth at 25% in a year. That is a lot, and that is not sustainable. It's not normal. And so I will end this report with what my predictions are and how these things are going to play out, because clearly we cannot have another 25% for this entire year. While the relative better supplied city center has reported the slowest gains in city, under 5%. So overall under 5%, and that is just because the supply when it comes to things like apartments is extremely high in city center, and so those don't see as much price gains as the other parts of the city. The sales for Feb is at 2,135. Last month was 1,650. So that's a huge uptake, right? But when it comes to new listings, we went from 2,137 to 2,711. However, that is nowhere near enough for the amount of sales that's happening. And therefore, the inventory barely went from 2,150 to 2,355. So you can clearly tell the gap between the sales and the new listings is very high. There's a huge surge when you look month over month. But because both went up by almost similar amounts, the inventory just couldn't keep up, and you're still stuck in low inventory. Now let's take a look at the benchmark price across the city, total, and then also for each property type. We are seeing gains on all property types across the city, and big ones at that. So when you look at the total residential price, you can see we are up $12,700 month over month and 10% year over year. So that brings us to $585,000. When we look at detached properties, that went up by $19,000 month over month, and a year-over-year increase of 13%, bringing us to $721,300. Semi-detached, month over month, $14,000 finally. This was much needed, and I've been telling you for a couple months now, it's just all because there was no supply. So there were no sales, so there was no data to really cause that price increase to happen. But now we are seeing a surge of semi-detached properties, and those are quickly being absorbed. People are going into multiple offers and bidding for those properties. And so therefore, now you can see that huge price increase month over month. When you look year over year, it's at 12.7%. bringing us to 639,100 for the benchmark price. When it comes to row townhouses, they have absolutely killed it in 2023, as we know. And what's happening now? We're still seeing an increase, constant at 10,100 month over month, 18% year over year, bringing us to 436,500. The apartment price, month over month, went up by 5,600, not as much as all the others, but still on an upward trend. And year over year, amazing gains at 17.2%. Now, of course, this is across the city. There's different things to consider when you're looking at different communities, different house types, and they don't necessarily reflect the average and median prices in different types of properties. This is just the benchmark based on a very fixed criteria by the Calgary Real Estate Board. So if you want more specific pricing based on the community that you are looking for, make sure you reach out. Now, moving on, let's take a look at the Calgary house stats by property type. And this is very interesting to know because it gives you an idea where you're going to face the highest competition, where we have inventory problems, where the highest demand lies, and how you need to position yourself in the market. So detached, year over year, we are higher, 20% higher on sales. Semi-detached is 36% higher on sales. So clearly you can tell there's a huge uptick from last month, and now all of a sudden semi-detached is also trending. Row townhouses, 12%. Apartment at 30%, and this is where that data is. Now, when you look at the new listings, you can tell that the new listings for detached is not as much as last year, 5% more. The semi-detached, 16% more. Row townhouses, 27%, and apartments at 20%. And so you want to directly be able to compare these two numbers because if the sales is extremely high, like 20%, but the detached listings only went up by 5%, clearly you're going to have inventory issues because the amount of demand is not matching up to the amount of supply. Now, this is year over year numbers, so it is still relative and it's not an absolute count. In terms of the inventory, you can see across the board, we are suffering as far as year over year numbers go. We are 18% lower than last year for detached, for semi-detached, 13%, for row townhouses, 6%, and for the apartments, we are looking at 12% lower. So overall, what does this mean and how does it add up? You look at this number, which is your sales over new listings. So that's the number of sales happening divided by the total number of new listings coming on market. The closer this is to 100, the tighter that segment of the market is. And anything above 85% is generally what I highlight. That is just cause for concern. But here we can take a look. There are two that are above or at 80 and above. So 80 and 86% for detached and semi-detached. So those are currently the tightest parts of the market right now in terms of the number of sales happening, but followed very closely behind by row and apartments. So overall, very tight market still. One thing to note is the row townhouses in terms of months of supply. So if everything were to sell right now, what's on the market, and no new inventory comes, everything is gonna sell under a month. Now, let's quickly take a look at the summary by the Calgary Real Estate Board by property type. It more or less paints the same picture, so I'm not going to go completely into every single statement right here. Feel free to pause the screen, read it through yourself, depending on what property you're trying to buy. And if you need more details, more information, again, like I said before, feel free to reach out. I would love to have that chat and discuss where you are at and what's best for you. So looking at detached, 1,195 new listings came onto the market, out of which 75%, watch this, 75% were priced above 600,000. That is extremely expensive. The magic range is between 500 to maybe 650 for like a first-time home buyer where both are working, and that's generally what they're looking for. And clearly, the amount of inventory that's coming above that 600,000 mark is a lot. And it just crosses that line for a lot of people for what they're looking for. And so therefore, extreme competition now in that first-time home buyer segment. Semi-detached rise in new listings compared to sales was short-lived. So we had a huge problem with no new listings for semi-detached on the market when it came to Jan. And then all of a sudden, all these new listings came on market, but then the semi-detached benchmark went down. And I clearly said, clearly all the inventory that's coming on the market is going to cause all the sales to go up, and it's going to cause the benchmark price to go up. And that's exactly what happened. We saw buyers shift away from potentially on the upper end of row townhouses into semi-detached. Some people who were finding the detached too expensive because all the inventory that was coming on was above 600,000 pushed themselves down to semi-detached. And so we saw a rebalance happen in the market. When it comes to row townhouses, 457 units in Feb, contributing to a year-over-year increase of 22%, supported sales growth. So across the market, that's what's happening. The more listings come on any particular segment, the more the sales happen, and the higher the benchmark price goes. Same thing for apartments. Sales in Feb reached 638 units. Year-to-date sales increase of 39%. Strong demand for apartment style because they are the most affordable parts of the market. And now, unfortunately, for a lot of buyers, they waited on the sidelines a bit too long, expecting a market crash. And I told all my buyers, like, Calgary operates on a macro economy level. The dynamics are different. And you can't apply the same principles from other parts, other markets in Canada to Calgary. Calgary has its own economic factors running for it. How long will this go? I will put out a video about my 2024 predictions, but that's what you got to look at. And 2024 clearly is going to be a still very strong year for the Calgary market. And so everyone is now settling in for apartments if they can't afford the row townhouses, because row townhouses has now started getting out of hand. Moving on to the benchmark price for different parts of the city. And this is extremely important because the overall benchmark only paints a very small part of the picture. But depending on which community you want to live in, it is extremely important to understand these numbers. And depending on your affordability, you will know where you can buy a home. So when we look at the north, they went up month over month by $9,900 to $562,900. The northeast went up by $8,000, so that makes them $503,800 for the benchmark price. Remains the ideal balance between affordability and good neighborhoods. And now when I say good neighborhoods, I suspect a lot of the gains are actually coming from communities far north of northeast. So unfortunately, a lot of my buyers, almost 60-70% of my buyers, straight outright when they set up their search, remove northeast. People don't want to move to northeast. But the communities that are on the extreme north end of northeast are actually, people are realizing the better part, and you still get something for an extremely affordable price. And the communities are developing rapidly with a lot of amenities, and people are now starting to prefer that. So that's what I think is driving up still the price more for northeast areas. When it comes to east, you can see here, went up by $2,900 month over month. Southeast finally has started catching up. We had a bad couple months, and that again, I blame it completely on inventory. So because there was barely any sales happening, barely inventory for that affordable price range, there was not enough to push that benchmark price up. But finally, Southeast is having its moment. I suspect a lot of these large gains are coming from the surge in semi-detached making its way to the market, which was a major issue through the second half of 2023. On South, we went up by 13,700. West went up by 16,300. 2 months in a row that it's been above 15,000. That's amazing because in December they went down by 20,000. That was a huge drop that they saw, and now West is starting to catch traction again. And Northwest, major shift from the gains seen last month, and they remain the number one choice for most buyers because it's an extremely amazing part of the city, quick access to mountains. Now with the completion of Stony Trail, that has been absolutely amazing to get to any part of the city. And also they have amazing neighborhoods for new families, people starting out new families or trying to expand out. One of the best like schools and neighborhoods. The overall Northwest is amazing for families, and it's highly preferred. But clearly you can see that push on benchmark price. And so the longer you wait on the sidelines, the harder it's going to be for you to get into Northwest. And they went up by 22,000 in 1 month, year over year, they're 12%. And so they're sitting at 641,500. City Center finally seeing some positive gains at 8,000. That is remarkable comparing to where the trend has been over the last, say, 6 months. So they're seeing some really positive gains. People are absorbing all that inventory that's in the city center, and they're at now 598,600, up 4.8% year over year. Now let's see what are some of the biggest losers and biggest winners in the city. And now when I say losers, there's no real losers, because finally in a report we are seeing zero negative month over month. It is amazing at what's happening month over month. The percentages are so high in number of gain, the type of gains we are seeing. So when we are looking at detached, two biggest losers, northeast and east. And when I say losers, they just saw gains of 1.74% and 1.24%. Those were winning numbers just a couple of months ago, because now the winning numbers are so much higher. Northwest and southeast have seen an increase of 4.2%, and southeast is at 3.34%. That is extremely high for month over month. Apartments, biggest losers, 1.35 for city center and 1.17 for east. Biggest gains, 2.14 for northwest, 3.03 for southeast. Let's go southeast. Semi-detached, biggest losers, 1.81 for north and 0.64 for east. What are the biggest gains for semi-detached? 3.71 for west and southeast, 3.41. Let's go southeast. Row townhouses. What are the biggest gains? Let's start with gains. 2.86 for city center, and for south we have 3.21%. For the biggest losers on row townhouses, 1.55, and on the west, 1.98. So as you can see, overall, almost everything is above 1%. So everybody is gaining in this market. And the longer you're waiting on the sidelines, you're not only missing out on these gains, but you are filling their pockets, because you got to pay those higher prices, right? But this is always fun to look at, see where the dynamics are shifting in the market depending on people's preferences. And stay tuned for next month's biggest winners and losers. Moving on to total sales. So as we can see, total sales over all the way back to 2010, we are still second highest. 2022 started the whole trend, and of course, so that has the highest sales right here. But you can see the year is off to a very strong start and is only going to go up from here. So love it. Total inventory, we are at all-time lows all the way back to 2010. So for a market that has that high level of sales, but that low level of inventory, clearly there's very, very strong dynamics that are pushing against the buyers, leading us to be in a very, very strong seller's market. Now, there is more to this. What I think is going to happen over the next couple of months, the biggest factors that could potentially impact the market. And I'm going to put out a 2024 prediction video. So make sure you subscribe so you get that video and you understand how to position yourself depending on what you're looking for. Because I don't say that every single time is the best time to buy or the best time to sell. Depending on what you're buying, depending on what you're selling, depending on your life situation, what you want to do and what your goals are, that my advice is very, very different for everybody. And so this is not a blanket statement that everybody should be in this market. In terms of months of supply basically indicate the level, the pressure on that particular segment of the market, and therefore the highest level of competition in that segments of the market. When it comes to benchmark price for Feb across all segments, across all property types, I absolutely love this graph for buyers. Gives you a very clear picture of where you stand and what you want to buy, and allow you to maybe shift that decision based on your priority. So for example, this is how you use it. So when it comes to what you would do is decide the budget that you want to buy a house. So that is something generally you can change because it's dependent on your income, your debt, and everything, right? So if you decide and you find out that you can afford $500,000, then you start deciding what property types you would prefer. And I say prefer because I want to highlight that word. It's very important. Because if you might want a detached property, but now if you're like, I can only afford $500,000 and detached, where do you find yourself on this chart? Clearly only east, and maybe, just maybe, you find a good property, because oftentimes in east, Yes, you'll find something for 500, but it's going to be something from 1970s or 60s. So that's necessarily maybe not what you want. You prefer a newer property, lesser headache. And so then you find yourself looking at semi-detached. Now, all of a sudden, that opens doors to potentially looking in Northeast and East. But you're like, I don't like Northeast. Maybe then you shift down to row townhouses. And now all of a sudden you have way more options. You can now get into communities that weren't accessible before on the different other price ranges. So this is how I would go through this. If you need even more information on a very specific property type, you're like, I only want a 2-bedroom townhouse. Maybe that's a different price range. And so reach out for more details. Now, looking at the total inventory by price range and the total sales. So on the left side, I have marked all the red bars. You can see the red lines. Those are where we were last month. And so anything above that is basically new inventory that has appeared on the market since that point in time. Now, understand that there might be a lot more new listings that might have come, but because everything was absorbed, this is where we stand right now in the market as of this day. So you can see across the board, when it comes to all the way up to that affordable price range of 700,000 maybe, things are very, very low on inventory increases. Everything is quickly being taken off the market. Anything above 700,000 is seeing still a bit more on that increase. But why is that? Because those don't sell as quickly as the ones on the lower price range. Because when we look on the right side, you can see across the board, the number of sales happening for that affordable part of the market below 700,000, way higher than what we're seeing in terms of the total inventory left, right? And so city center dominates across all price ranges with higher demand in areas like West and Northwest, having extremely low inventory, especially in the sub 500 range. Now, the magical range of $700 to $1 million continues to surge as some people stretch away from those mid ranges. And so you're seeing more people getting better value for their money. So even though you would spend $1 million around the Toronto GTA area, you get way more for your money on that same $1 million here. And so you still see those people trying to make the move and provide a better lifestyle for their family. But as far as the affordable part, I think we're going to see a slight shift in how that dynamic works. Finally, we can take a look at the total sales and by different property types and how those stand against year-to-date numbers from previous years. So the trend we see here is how previous years, the sales data is different from the new listings on the right side right here. So let me highlight that. So this entire part for previous years in terms of the total sales versus how total listings have been, the bars, the ranges look different. Versus when you look more closely at 2023 and 2024, and even 2022 to an extent, they very closely match each other in terms of the sales and new listings happening. And why is that? Because everything coming on the market is being absorbed. So that's the kind of data that clearly shows that people are now making choices maybe that they didn't think they would. They are going for properties that they initially didn't think they would buy, but every single property on the market has a buyer for it, and everything on the market is going. And finally, we can see here the City of Calgary total inventory and sales. Very clear change of trend. From Jan, we have just straight shot up, rise at a rate higher than the amount of inventory. So the gap between sales and inventory is very quickly closing. We had way more supply difference in December. We were able to actually get properties under list price, and not just under list price because they were overpriced, but because they were just on the market for longer. But now, as that gap closes, I'm seeing properties go off the same day that they're listed. A lot of the showings that I go in with my clients have another realtor coming out. There's another realtor inside. It's just overlapping showings for almost every property. And that's the current market where we're in. And you can clearly see that in this graph. How does that affect the median and average price? So generally the average price and benchmark don't necessarily correlate to the same extent, or because you could have way more expensive properties in a certain price or certain area sell, which is not reflected on the benchmark price. But here we can see a strong shift in average that is aligned with that same uptick in benchmark. And this shows that it's not just a temporary shift. It's not just a temporary monthly data that is causing that shift to happen, because it's not just a few more expensive properties or cheaper properties that sold. It is actually an actual overall shift over all the properties for that data for that month, causing it to be more of a trend that I am expecting to see as we go forward in a very strong next 2-3 months with huge price gains across the city. And that is the market for this month. So if you found this video valuable, make sure you reach out. I'm happy to chat this over, give you way more information than what's on this, because of course, depending on the community, depending on the house type that you're going for, and depending on your family situation, your needs might be different and what you're looking for might be different. This is in no way meant to create any kind of FOMO. I hate the idea of that. I love data and I love to dig in and really dissect things and figure out what makes sense for any particular client, and not just provide a blanket statement for everybody, because everyone's situation is different. So make sure you reach out. I would love to have a call. You can book it in the description. I will also provide this PDF as a free download so you can browse it by yourself. It's completely free, so you can find the link to that in the description too. And make sure you stay subscribed, because there's a lot of valuable videos I release throughout the month that will keep you updated on where the market's at, and if anything has changed, this is where you're going to find out. So thanks again for watching till the end. It's great having you guys here every single week. And if you like this kind of content, make sure you like it. It helps me reach more people who need this data to make that better decision. So till next time, have a good one. Peace.